Nice guy on YouTube wrote me a comment. He says, hey, what do you think about this gold Elliott wave count? He's looking at it to the downside, and I'm personally long. And I said, I can't argue with your count. I like it. The reason for being long gold is more of a fundamental intermarket, piece of analysis. I don't think the Fed's going to raise rates. Dollars continue to sell off. Silver's acting strong. Gold miners are hella bid right now. Commodities seem to be acting pretty strong. Commodity-related currencies, blah, blah, blah. So I said, gold, I think, should move higher. I have a loose count on it, but nothing I'm really willing to get too excited about. So I wrote back to him and said, I like your count. You very well could be right. And he wrote back to me and said, I guess that's what makes a market. Just wanted to get your opinion, as you're definitely the best Elliott wave guy I've ever seen, and I'm still learning, always learning. Love your carefree attitude in such an unknown industry. It's something I truly admire and doubt I'll ever achieve what you have, like you have. Keep it up. That it really got me thinking, and it's something I've thought about for years, and that kind of comment brought it back up in my mind, and I just want to throw this by you. It's not that I don't care. I love this industry, okay? All I've ever done. I don't know where the market's going. I have no idea. I can't know. Nobody can know. It's literally trying to predict the future. And the only thing that is certain is death and increasing taxes. So for me to come across and say, here's where the market's going, is disingenuous. And true, I do a lot of stuff on CNBC, and when you're on CNBC and on national TV, you have to take a stance. And I put all the tools together to give my best outlook. And as my media profile has been on the rise in the last several years, I've been doing TV. I first did Canadian television like 2006, 2005. So I've been doing TV for a decade. CNBC since 2007 or 8, I believe. You got to have an opinion. And my profile, as I said, has been on the rise. And as when that comes along, haters come out. And people, if you get a direction wrong, they'll just crush you and try to make you, basically bring you down to the level of where they are. They're mad at themselves, and they've got to kind of pull that out and make other people feel bad for being wrong. So that's fine. I'm sorry for whatever situation that makes you an internet troll, but sorry. If I make a call that's incorrect, get used to it. Okay, nobody knows where the market's going. And what's been incredibly liberating to me as a trader, as I've said, I'm 37, been doing this since I was 22. I placed my first trade when I was 19. So over half my life, you don't need to know where the market's going to make money. It's just not the way things go. Your job is to find good setups back here, risk X to make this amount, okay? The minute you put you set those weights down of saying, I have to know where the market's going, I need the perfect indicator to tell me where the market's going, that's not right, okay? That's not what trading's about. It's about assessing all the moving pieces that are happening behind you and then trying to execute a trade that risks X to make 1.3X, 1.5X, 1.8X, maybe 2X. So that's trading. The other side of this industry is, analysts who just say, this is where the market's going. I mean, that's their job. That's what they have to say. I kind of straddle the fence. Like, I'm an analyst, but I'm also a trader. Let's shift gears to traders. A trader is a very interesting character, and I've known a lot of traders, a lot. This is all I've ever done now in my industry, in my career, my professional career. And some of the best traders that I know, guys, are the most humble traders who really don't have an opinion. Like if something goes wrong, for instance, my wireless mic falls out and somebody might try to play it off like, oh my God, be all professional. I don't give a shit, right? Like, okay, that fell out, so what, right? And that's happened to me live on air several times. You just flow through it. And that might come back and say, well, you have a carefree attitude and you're too lax about things. No, I think it's me fulfilling the obligation of being a trader that does not know what's going to happen in the future and can't, profess to you that I have all the answers. Am I good at kind of weighing the reward versus the risk and picking up a slight edge in the market? Yeah. Am I good at handling a trading account? Yeah. I made money trading last year. I'm up a little bit of money this year, nothing spectacular. I really hope I make some more money trading this year. So A good trader, guys, is somebody who is going to come out to you and say, I'm going to look at both sides of the equation. It could be this, it could be this. That's why I love Elliott Wave. And people love just berating out of you for Elliott because there's a primary count and there's an alternate count. Guys, the best traders I know are always looking at multiple scenarios. They're always second guessing themselves. They're always trying to look at what they might be missing in front of themselves. So that comment was really interesting. And all I'd say to you is a good trader is somebody, here's a quick way to identify a real trader. If you talk to somebody and they immediately come up to you and the first thing they start telling you about is their winning trades, they're not usually a good trader, okay? It's like somebody who comes out and constantly needs to brag about themselves. Usually that person is hiding something, they're trying to make up for some darker feeling down below, which, happens. I'm sorry, that's just life. A real trader will usually bring up their losses first. And when you're talking to a real trader, they'll say, here's I just got my butt kicked on this trade. Okay, because a real trader knows the winners will come, but traders like to talk about their losers. So on that side, we just talked about the analysts on TV, and we always have to know where the market's going on one hand, and then the other hand, you guys are dealing with people on the internet marketers are just showing you their winning trades all day long, and every time that you pull up their trading account, they're up 25,000 every day, all day, and you're like, dude, come on, really? I mean, the best hedge fund managers in the world who are literally making 500, 750 million a year, 225 million a year, they're getting taken out on stretchers in here. Literally. They're getting taken out on stretchers. And you're telling me you're a small retail guy who can pull down 200, 300, 400% return every year on your account? They're not telling you the whole story. So, do I have a carefree attitude? No. I love this industry. I love what it's done for me. I guess what? I'm coming up on 20 years in this industry. I can't wait for my next 20 years. But do I have a carefree attitude? No. I love this very much, and I work very hard at this industry. Do I try to hold myself out to having all the answers? No. Does that make me a great marketer? No. To get your attention? No. Trading, whenever I do a webinar, trading is this. I use this analogy. It's a boxing match, right? You're going to get hit. You're going to give some shots. You never go for the knockout punch, but you get up after you've been knocked down a few times and you try to win the decision at the end of 12 rounds. So trading is a boxing match. You got to love the sport. You got to love what you're doing. You're going to take some lumps, but it's a great, constantly moving chess match that you really need to love and enjoy. Enjoy the process, and the results will come. So, I just hope you don't mind me taking a few minutes to talk about that. Am I carefree? Yeah, I guess I'm kind of an upstate, laid back kind of guy, but I'm very passionate. I mean, for sure, my wife knows I've broken a few keyboards, and, I'll get pissed off on some things, but when it comes to trading, you got to look at both sides in order to not miss anything. If you get too bullheaded on one thing, you're going to get run over. If you're always holding yourself out, showing your winning trades, you're just an internet marketer, and don't believe what you see out there. So trading is enjoyable. It's a lot of work. It's a lot of fun. You're going to have ups, you're going to have downs, and that's the wonderful industry that we're in. So, it affords a lot of personal freedom. Literally, I just got a haircut. I just took Jake and Brody with my wife for them to get their first haircut here. I'll throw up a video here. So I just wanted to talk about that a little bit. Tell me what you think. Question that below, comments. So, but thanks for that, Slippery Slope. Thanks for that comment. Thank you for subscribing. My subscriptions have gone up pretty heavily on this YouTube channel. Really liking YouTube. I was big on Twitter in 2004, 5, 6, and 7 when Twitter was early. That was kind of my bridge to my professional business, to let you know where I was going to be found on the internet. I really want to make a home at YouTube. I love making the videos. I can even show you the equipment. I'll show you in another video, but I can turn this around and show you what I'm doing here. So I hope you enjoy the videos. I'm going to do some more kind of fun stuff just off the cuff like this. If you don't mind, throw some comments down there what you'd like to talk about, and we'll have some fun with it. So I'll flip over, do a little bit of market analysis, so it's isn't just a 10-minute rant, but I really wanted to talk to you about that, and let's dive into the markets. Okay, guys, interesting move towards the end of the day. So let me just take you through the sectors. actually do the ETFs. And I'll show you that there was something being priced in of a rate hike here. So just taking a look at the sectors and ETFs. So the strongest on a percent change basis at the close was capital markets, financials, broker-dealers, banks. And then we finally get into something non-financial, which is healthcare, regional banks, and then some energy. So a lot of financials, which would be bid up on the outlook for higher rates. If we go down to the losers today, biggest was the bull shares on gold, real estate, which gets hurt in higher interest rate environment, REITs, metals, the gold and miners took a huge reversal today, real estate, so on and so forth. So, with gold, REITs, metals, miners getting hurt the most after being up pretty good early, and then financials, broker-dealers, money center banks, that starts to say we have an outlook for higher rates. So I think that's pretty interesting. Crude oil kind of remained bid. Let me pull charts in. It did break out pretty well here today, so I'm not exactly sure what the wave count is at that point, kind of along the lines of my last little rant there, but just looking at fib on the upside, we broke through 618 at 41 and change, and we have the 786 just above us at $45.58. Go down to extensions. We're going to go blue dot to blue dot. The 618 is going to come in right on top of that. So 45 and change is going to be a major decision level in crude. I am still short the dollar. I still have UUP on. It kind of bounced a little bit here today. And the reason the dollar bounced was the yen. We've been watching this dollar yen, and here's the deal. As the dollar yen Forex rate drops, the dollar's weakening and the yen is strengthening. Okay, I had to think about that. So what's happened is we held the zone of fib support for a while. Then we broke down and we just did like a double bottom on this zone of support. So we got a pretty good move up in the dollar, lower in the yen, which that indicates, again, a potential rate hike. So I don't really know what came out in terms of news, but just looking at the sectors, currencies, commodity movements, there's something that's coming out for a rate hike. So we do have the yen trade on. We had an okay P&L day, and a lot of it was from this trade, which is the yen puts that we hold. So the way this whole works, right, dollar yen goes higher. That means USD is strengthening, yen is weakening. If you want to trade the yen, you just trade the ETF. So FXY moving down, which would mean a yen weakening, which means a dollar strengthening, which means the Fed likely is trying to hike rates, which, again, that kind of came out of nowhere. I don't know what the news was. I looked around quickly, didn't see much, but we do have the FXY puts on with the research customers. So, as I said, win some, lose some. I'll throw some video up from the kids getting their hair cut. I just shot some video down here of us screwing around, so hopefully you enjoy it.
Kiss. Oh, I got a kiss. First haircut. Jakey's being a big boy. We're cruising, eating lollipops, so watching YouTube with Ashley. Are we going to be on Facebook later? YouTube.
Yeah,
YouTube,
probably.
definitely on YouTube. It's good. Okay. You want to hold it? You can hold it. All right.
I hope he wasn't late for delivery.
Yes. Okay.
Yes.
Doing a good job.
We're gonna get through this.
Oh yeah. Where you? Where's your dance? Put your shit down. Daddy, yep. Good dances, buddy. Uh-oh. Oh, what happened? You bump heads? Okay. Bye-bye. 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 That means more.